Welcome to Policy on Demand. I'm Andrew Pryor. The Financial Accounting Standards Board, or FASB, has issued an exposure draft to require additional income tax disclosures. Jen Spang joins us to discuss the proposed changes in the exposure draft and their impact on companies. Jen, welcome.
Thanks, Andrew.
So Jen, could you start by just walking us through the key proposed changes in the exposure draft?
Absolutely. So there's really two major focus areas for this exposure draft. It's very different than the prior two exposure drafts for the income tax accounting standard, for those of our listeners who've been following the project for the many years that it's been progressing. The exposure draft has really been narrowed and focuses on two specific areas: disaggregation of cash taxes paid, and then incremental improvements to the rate reconciliation. From a cash tax paid, there's really 2 points to keep in mind. One is, on a quarterly basis, companies will disclose disaggregated cash taxes paid for federal, state, and foreign. And then on an annual basis, it will be further disaggregated for any jurisdiction over 5% of total cash taxes paid. One important note there: cash taxes paid is going to be net of refunds. So that's something companies will have to think through. The second major area is rate reconciliation. So there are two major developments there. First is a mandatory list of 8 categories that will be required regardless of any kind of quantitative threshold. The second is disaggregation using a quantitative threshold. So certain of the categories will be disclosed using a 5% test on the nature, and others, the foreign tax effect being the one that most are focused on, will be disaggregated by both jurisdiction and nature. Now, the 5% is what most people know as the SEC rule that exists today for the overall rate rec items. It's essentially 5% of your applicable statutory rate. So for a US company, that's going to be about 1%, just over 1%.
Jen, thanks for that great overview. So I guess the next question would be, when is the exposure draft expected to be finalized, and when will the proposed changes become effective?
So both of those are to be determined. So the comment letter period is 75 days. It ends at the end of May. Currently, the proposal would propose that the transition would be on a retrospective basis, which means that you'll actually show disclosures for all periods presented on the new rules once the standard was finalized. That is something that the FASB will be looking at comments to see if that impacts at all how long companies will need to be able to get ready for an enactment. But the FASB's moved very quickly on this project. It changed its direction in November of last year, and there is a lot of pressure to finalize the standard. So I would not be surprised if we saw a final standard this year. As far as the effective date, we'll have to see. After they go through the comments, they'll figure that out. But at a minimum, it's 24 or 25. I don't think this is 3 years out. So it's likely very soon.
Thanks, Jen. That does sound like a pretty aggressive timeline. So what should companies be thinking about or doing to prepare for these proposed changes?
Yeah, I think that's probably the most important point. And I'd say there's really two things. One is there is a comment letter period for a reason. And I think if companies want to influence the direction of the project, now is the time to engage. So I mentioned again, the comment period closes at the end of May. So I would just say engage. But the second thing is, regardless of where you are on this, recognizing that this will be finalized probably in the near term, I suggest companies start getting ready now. You may be using 2022 as a starting point. If this ends up being effective in 2024, for instance, you'll have 3 years that you need to disclose on that rate reconciliation. So if you think about that, using 22 would be in the mix. And using that, you can assess any kind of data gaps, systems, issues that need to be addressed, process controls, and et cetera. So I think now is a good time to start getting ready for what impact these proposals would have on you.
Excellent. Well, thanks, Jen, for joining us to share your insights regarding the exposure draft.
Thanks for having me.
Included in this email is a link to the PwC insight on the FASB exposure draft. As always, thank you for spending this time with us. We'll see you next time.